Hello everyone and welcome to the specialist trading presentation of trading the three best and worst stocks of April 2017. This was just this past month, just a few weeks ago. I want to start up by sharing with you this chart, and this was in CR Bard. As you can see, a full couple of months prior to April, actually nothing was really happening within the stock. In fact, we were just basically going sideways. As you see right here on our PTS Primo charts, going back to February, March, and into April, we're basically drifting just a little bit higher to sideways. Well, one of the strategies I'm going to be talking about today actually generated some signals during this basically sideways market. In fact, during April, this past month, there were two signals generated to buy within the first week of April, and then in the second week, another buy signal was generated. Now here's what's interesting about this. Even after these buy signals were generated, not much seemed to happen in the stock, CR Bard. So let's see what happened in the third week of April, just a few weeks ago. Well, some news came out. In fact, it was announced that medical tech firm Becton Dickinson was buying out CR Bard for $24 billion. So once that news came out, which I believe was on a Sunday evening, April 23rd, well, look what happened. The stock jumped up. In fact, it jumped up nearly 60 points. Now, how was it that we were able to generate buy signals with our strategies prior to that news? Did we research the company? Did we have someone go and try and get inside information or try and break into the offices to find out what was actually happening within the company? Not at all. In fact, we don't even look at that, any of the fundamental information for generating our signals. Everything we take in terms of buying or selling is given to us from the market. And this is what I'm going to be sharing with you today, how simple it is to make your trading decisions once they're based off of what the market is telling you and not an outside source. So this promises to be a great presentation. Welcome once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. If you're new to my presentations, we are all about educating you as a trader. And the reason why we focus so much on education is because it's been estimated that upwards of 80 to 85% of all traders fail. And you have to ask the question, why? If there's so much information out there, so much access to resources, why is it that the majority, well over the majority of traders fail? Well, we feel it's either because they don't have the proper education or they don't feel confident enough to make their own trading decisions. And what happens when you don't feel confident enough to make your own trading decisions? Well, then you rely on someone or something else to trade for you. In other words, you go to a chat room or a trading room to find out what everyone is buying or selling, or you rely on some news events to tell you when you should buy or sell, or you listen to some trading guru on TV tell you what he likes, and that's what you basically do. You piggyback off of what they do. We feel this is why most traders fail, is because you're relying on someone or something else to make your trading decisions for you, and this is really a recipe for disaster. I know this personally because when I first started trading some 40 years ago, this is what I used to do, and trust me, it didn't work. It wasn't until I got the sound fundamental education of learning how to listen to the market, the things that I teach in my courses, that I started to get consistent in my trading, and I feel this is what has been able to sustain me. Now, I've been trading for 40 years. I started out my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist. A specialist is simply someone who made markets in roughly about 50 or 60 stocks. So if you wanted to buy or sell a particular equity, you had to go to the specialist who specialized in those markets. I did that. I made markets during the crash of 1987 and the bull market that followed. So I've been trading in just about every market environment imaginable, straight up markets, straight down markets, sideways markets. I've traded about every system, every strategy, every technique and method you can think of. So I know what works in terms of consistency, and I know what doesn't. And this is what we do at Specialist Trading. I teamed up with Pro Trader Strategies around 8 years ago, and all we do is teach and mentor our students in over 110 countries around the world and in every state in the United States, all of the things, techniques I've accumulated in my 4 decades of trading, things that will hopefully be able to elevate your trading. Now I'm going to show you some things that are offered in our stock college today and how we could have used those to trade last month's most or best performing stocks and least the best performing stocks. But before we begin, as always, we are required to show you this, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results with these different techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you are taking a brief moment to view our required disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there. You may want to copy that down. Every day I post new information, anywhere from little bits of wisdom along the way that I've accumulated to actual signals that our strategies have generated. Just about a week ago, actually it was last Friday, it was just about 3 or 4 days ago, one of our strategies generated a buy signal, and on Monday the market went up tremendously, and we were able to get out with a nice profit in just a few days of trading. So there's lots of great information that our strategies generate, as well as information I can pass on. So feel free to follow us on Twitter. Now, once again, we are a little bit different from most webinars and presentations you'll see, because we are simply devoted to educating you as a trader. It's true, we do provide all of our members with strategies and signals to those strategies, but they are simply there to educate you and for educational purposes only, because we want you to have access to a way in which to check your work. While you're learning how to find out what these signals are, you can check your work with our signal service just to make sure that you are in line with that. But ultimately what we want to do is have you come to the point where you can spot these signals, spot these buy and sell opportunities on your own. That's what my goal is, not to force feed you signals, not to tell you what to buy or sell on a daily basis, the way so many webinars do and so many other teachers do. But we really just want to educate you so that you're free. So that you're free to make your own decisions, free to trade when you want to, what you want to, and not have to rely on an outside source. This is what we do at Specialist Trading. This is the same edge that was taught to me, and which I really strongly believe has been able to sustain me for 40 years. And this is what I want to teach to all of you, hopefully as my new students. All right, so with that said, we are going to have a great class for you today. But before we begin, I just want to say, if you have any questions, kindly wait till the very end to ask them. I have a lot of slides to show you, a lot of information to share with you. But if we stop for every slide to ask a question, this will go rather lengthy into the afternoon. So we'd like to keep it to about 45 minutes. And then we'll reserve the last 20, 25 minutes for any questions that you may have. Okay, so if you just joined us, please wait till the very end to ask any questions. The only question I will answer is the most popular one, and that is this being recorded? Yes, it is. So if you have to leave early, or if you have technical difficulties and you can't access the screen, or you can't hear the sound, many times if you log off and back on again, you will be able to see and hear us clearly. But if you can't, just request a link to this video from Pro Trader Strategies. All right, so let's begin. Now, firstly, there was not much volatility in the S&P 500 during the month of April, just this past month, but several stocks did manage to deliver some big gains nonetheless. What I want to share with you today are the top 3. These are the top 3 gainers of the S&P 500. All right, so the best performing stocks in April were BCR, which we shared with you in the opening slide, WFM, and LRCX. Let's take each and every one of these individually and tell you how our strategies could have traded and how well they would have performed or not performed. All right, so let's look at the first chart again. Once again, this is BCR. And the way we generated these signals was by using our proprietary strategy number 8. This is a great strategy specifically designed to trade stocks only. So it works really well with stock charts. Now let's share with you some of the highlights. It's designed to pinpoint strong stock moves. So if you're looking for a type of technique to get in and out quickly or for small gains, well, strategy number 8 is the opposite. Strategy 8 oftentimes will catch these major moves prior to an announcement, prior to some big volatility coming into the issue. Now, its intensity level is a 2. In other words, if 1 is the most intense and 3 is the least, it's right there in the middle at a very moderate 2. All right. It is an indicator-based strategy. So we're basically taking all of our setup from a specific indicator that we monitor. All right. It also uses a dynamic exit. Now, a dynamic exit means that it's not fixed. So you don't know exactly where you're getting out when you get into this trade. Now, you can use your discretion. If you want to get out with a 1 or 2 point gain, that's fine. If you'd like to get out with a 20, 30 point gain, well, that's up to you as well. But we show you all of this in the course. Now, once again, members receive automatic buy-sell indications, but this is simply there for educational purposes. We're not putting it there to have you blindly take signals without any idea of why you're doing it. We're doing it so that you can ultimately check your work to see if you're in line with the actual signal that was generated that day. As with all of our methods, every technique, every strategy, we always ask our members to learn the strategy in its entirety, like the back of your hand. So paper trade first. And our edge here is consistency. We're not going to tell you that every trade works perfectly. We have some small minor losses from time to time. But the beauty in all of our methods is their consistency and their ability to capture some of the profits and able to recoup some of those losses. All right. So let's show you this trade once again. Now, excuse me, the beauty of this particular strategy is its relationship with the buy-sell line, the 50-period simple moving average, which we call our buy-sell line. So that's really what it's based off. Remember, we said it's based off an indicator, and it's basically the relationship with that specific indicator. Now, how you find out the first concept behind this indicator is by simply going up to the upper top left-hand corner in our PTS Primo charting platform and simply clicking on the buy-sell line, as we have here circled in red. Once you do that, you have a few options on how you want it displayed. What we want to do is display it with the color band ribbon on the bottom. This will tell us whether we should be buying or selling. If we have a red color band ribbon on the bottom, that's basically telling us we want to be looking for sell setups. If we have a blue color band ribbon on the bottom, that's telling us it's okay to buy. So let's click on the buy-sell line and let's see where it gave us. And obviously, even though we were going sideways since February, what was the buy-sell line color band ribbon telling us? It was telling us that we should only be looking at this stock from the buy side. You see, once again, how most traders will say, well, you know, Steve, the guy in the chat room I go to says this should be sold, or, you know, I like to follow the institutions and they have no interest in this stock. Once again, this is how most traders trade. You're taking your cue from what other people or other indicators are doing. What we take our cue from is the chart in front of us. And based off this indicator, which translates the chart, it's telling us that this should only be looked at from a buying opportunity. Regardless of what strategy you use, it should be from the buy side, okay? All right, so once we know that, we have to go a little bit deeper into this relationship. We want to see how far away it is from our buy-sell line, okay? Now, that's the second part of this scenario with strategy number 8. It's a specific formula which we need to have confirmed that tells us how far away or how close we are to the buy-sell line. All right. Now, we can't divulge what that is because that's part of the course, but going off of what we give you, it will automatically generate the signals based on that relationship. And then as you can see, well, it met all of the requirements here, the first week of April, and then again here, even though nothing had happened yet. Why? Because the market was telling you, not some guy in a chat room, but the market was telling you based off this strategy that it wants to go higher. It looks like there's going to be some type of an explosive move. And which direction is that move going to be? Well, according to the blue color band ribbon on the bottom, that move is going to be up. So we knew well in advance before any news came out, before it was announced it was getting bought out. And why did we know it was in advance? Because the market was telling us. So a week later, guess what? News comes out, and there's always a reason why someone can look back in hindsight and say, well, that's why it went up. Well, sure, you must have known about the news or you had fundamental analysis. Absolutely not. There is no requirement or suggestion for anyone in any of our courses to look at that because we don't rely on that. It's too subjective. It's much simpler to listen to the market. The only trouble is people go, well, why doesn't, why don't more people listen to the market, or why don't, aren't there more platforms or more ways to learn how to listen to the market? Well, because we've always been taught the opposite. We've always been taught, no, you have to look at volume. Oh, no, you have to look at support and resistance. Or, you have to look at what the institutions are doing, right? Or you have to look at the earnings, right? Well, if these things are so consistent, and this is the majority of what people are looking at, then why is it that 80 to 85% of all traders fail? I mean, that's a fact, because there's no consistency in those things. And what is there a consistency in? Well, in listening to the market. I'm living proof. I've been trading for 40 years, and I've only been listening to the market for the past 4 decades. So for me, it really works. This is what we want to teach people. All right, so that was our first stop that you could have taken advantage of just in this past couple of weeks. Let's look at the second stop, WFM. All right, now as we can see, we're going to be applying a totally different technique to this particular issue. This is the PET D. Now, if you're not familiar with what the PET D is, the simplest way to describe it, it's a roadmap for virtually any market, any direction, and any time frame. It's probably our most popular tool we have at Specialist Trading and Pro Trader Strategies just because of its unique ability to oftentimes tell you in advance what the trend is going to be. That's what it basically is. It's a proprietary color algorithm that tells you what the short-term trend is. If you see a series of green bars, the short-term trend is up. A series of red bars tells you the short-term trend is down. That's simple. And people will say, well, Steve, I thought we're not supposed to take our cue from indicators or outside sources. Well, let me tell you one thing. I've been using this for 4 decades. I learned this specific formula on the floor of the exchange. And it's different from most indicators in the fact that it doesn't predict how high something will go. It doesn't predict how low it will go. It doesn't tell you when the end of a trend is or the beginning. It just tells you, to the best of anything I've ever seen in 4 decades, the translation for what the market wants to do at that moment. Okay? And that's all it's doing. So it's not predicting anything. It's not indicating anything. It's translating what the market wants to do. And whatever time frame you're looking at, and whatever direction you're looking at, and whatever market you're looking at. So you can apply this to currency pairs, futures. You can use this on tick charts, on monthly bars. It makes no difference because it is translating, due to its proprietary algorithm, what the market wants to do. Now, we don't want to bog down all of our members with having to calculate this algorithm because it is a little bit cumbersome. So we've just made it into a color bar tool. All you have to do is look at the color of the bars. It's that simple. As we look at this example in Aetna, I just want to share with you how most traders trade the trend. Someone looking at this would say, well, okay, I'm convinced. I went to the chat room and they said stock is going higher. The volume has finally picked up, so I'm convinced. I'm going to buy it. And let's say you bought it somewhere around here when it broke out of this last little top here, and you say, boy, this is looking pretty good. I'm doing okay. And then all of a sudden, this happens, okay? This is the way most traders trade. They're a day late and a dollar short. They get into the trend far too late, and then when it changes, they either take a large loss or they continue to hold on to the position for the long run, okay? Take it from someone who's been there. This is the way I used to trade my first year of trading because I didn't know what to do. I thought, wow, I thought this stuff's supposed to work, and it doesn't. Once I started applying the PET D, let me show you how well it translates what the market wants to do. Once we add the PET D, well, look what happens. It changes the colors of the bar, and we don't have to wait till up here to know we're in an uptrend. We knew as far back as here, a full month earlier, we were in an uptrend, and we knew as far as early as here that we were in a downtrend. It was time to possibly exit or even go short if we wanted to. So as you can see here, the beauty of the PET D is that it tells you which direction you should be trading. Remember, it's not a strategy. It's not a system. It's a directional tool for you to decide what direction you should be trading, because that's really 90% of all the work. Because once you know the trend, you can apply any strategy, any technique, any method to that trend. All right? It doesn't have to be one of mine. It could be one of yours, anything. But that's how popular this tool is. All right, so let's go back and then look at our second best stock, performing stock, WFM. As we can see here, February, March, kind of in a rangy motion. Then in April, it actually really took off. From the very beginning of April all the way till coming into May, the stock virtually went straight up. How could the PET D have helped us? Well, once again, looking at our brand new PTS Primo charts, which has all of our strategies, all of our methods pre-canned, and all you have to do is just simply, it's as easy as just clicking on a tab. We would just go to the PET D Fast tab right here. Click it on, and automatically it changes the colors of the bars. Now, red, once again, is for downtrend. Green is for uptrend. You can see it's rather sensitive right here. And once we started getting into the green, as far back as the end of March, we knew that we were in an uptrend, okay? So what would be a way to trade this, though, since we are not actually using the PET D as a system or a strategy? It does not generate buy or sell signals. Well, at the same time, it can help us to find these very high probability entry points. How can we do that? Well, we just add specific patterns and specific techniques to this. One of my favorite is something we teach in the course and something I will share with you right now. It's an inside day. Now, an inside day is a very common pattern. I'm sure most of you are familiar with it. It's simply a 2-bar pattern. Now you simply take the range of both bars. The range of bar number 2 should be within the range of bar number 1. So bar number 1's range from top to bottom is rather large. Bar number 2's range from top to bottom is smaller, and it's inside that range. Now what we want to do is find an inside day pattern that is colored green. If both those bars are green, that's a very high probability entry point. Remember, this is not a strategy, because a strategy needs an exit point, it needs stop placement, it needs money management. We're just telling you where a high probability point of entry may be. So as we see here, well, we didn't really have any of those scenarios here, even here, but coming into April, what did we have? Well, we had a bar here and then a bar here. This is our first inside day pattern. And don't you think that would have been a good place to enter? Because look what happened after that. Okay, now if you had missed that, well, not to worry. Once you have these very strong trend patterns underway, you can look for more of these inside day patterns. Here's another one. You could have had a second chance to get in. Still followed by another one a few days later, followed by another one, and then another one. Had you taken that very first setup, that would have been 8 points in your favor all throughout the month of April. No strategy, not listening to fundamental news, not listening to chat rooms. You don't have to waste your money on all these products or techniques. All you have to do is, listen to the market. And the PET-D is translating what the market wants to do. Really simple technique, a really simple way you could have accumulated 8 points there in WFM. Let's look at our last stock here, LRCX. Okay. Now on this, we're going to use probably our most consistent strategy that we have at Specialist Trading and Pro Trader Strategies. That's strategy number 4. I have been using this on a daily basis in some form, in some capacity for the last 30 or 40 years. It's that good. It works that well. And let me share with you some of the highlights of this particular strategy. It's for virtually all traders, from beginners to advanced. So it really makes no difference if you've been trading 2 weeks or if you've been trading 20 years. Everyone gets the same basic format, and then we work out from there. If you're very conservative trader, then we work to show you how to trade it conservatively. If you're a more advanced trader and you like to trade with a lot more risk and you like to take different exit points, well, we show you how to do that. So everyone gets the same basic format, and then we work out by giving you all these different variables for entries, all these different variables for exits, all these different variables for stop placement. And then remember, it goes back to our philosophy. We want you to make your decisions on how to trade it. We're not going to tell you, no, this is the only way to trade it and you must buy this stock tomorrow. It's up to you. That's the only way you will become consistent. It's a recipe for disaster if you take your trading decisions from someone or something else. It won't work. Ask yourself, how's it working right now if you have some signal service or you bought some system that automatically generates buys and sell signals? How's it working for you? I can almost guarantee you that it's not doing that well. You have to be in the driver's seat, okay? Now, strategy number 4 is for traders looking to catch quick momentum moves, but we teach you in the course how to hold on to position longer if you'd like to. So you don't have to get in and out quickly if you don't want to. It's also a very moderate strategy to learn. It's right in the middle, number 2. It only uses one indicator. That's our buy-sell line, and I'll show you another way in which to display it. Now, the beauty of it is that it works in any time frame, any direction, in any market. So whereas strategy number 8, it really works the best for stocks, strategy number 4 can be transferred down to anything. So if you like to trade multiple markets, different time frames, strategy number 4 is your pick. Now, once again, members receive automatic buy and sell indications, little indicators on your chart to generate the signals, but these are simply for educational purposes only, a way for you to check your work. Our goal is to get you to the point where you don't need to rely on these anymore. Remember, once again, we don't want any of our students relying on anything other than their own decisions. We give you the knowledge and the education to make you feel confident to finally, for the very first time, make your sole trading decisions. All right. Our edge here is consistency once again. In fact, I'm going to show you a couple examples where you had some actual losing trades. But I'm going to show you how consistent these strategies are and their ability to recoup those losses rather quickly at times. All right. So let me share with you one of the rules for strategy number 4, because we want to leave you with something that you can start using right away and experiment with to see if it really does work. Here's our setup rule in strategy number 4. You want to look for a bar that closes either in the top or bottom 25% of its range. Now, I've talked about this many times. I'm sure most of you, since through your emails and testimonials, see the power in this simple tool. But for those of you who aren't familiar, All you're looking for is something like this. If you see an up bar like this candle, you want to measure the range from top to bottom. Okay, and this is something very simple you can see on site. Now the range is not the open to close. That's not the range at all. That's just the range of the body. When someone is talking about the range, they're talking about the bottom of the wick to the very top of the wick. Now you measure that range by sight. It doesn't have to be exact, but the top quarter, the top 25%, you want to close there as we closed right here. That is giving you an indication to buy. All right. Now at the same time, if you see a bar that closes in the bottom 25%, you take the top of the wick to the bottom of the wick, and if you close in that bottom quarter, that's the market telling you. That's not some guy in a chat room, but the market, the only thing you should be listening to, telling you that that's an indication that we might be going lower. So you may want to sell. Okay? This is a very, very prominent rule in a good number of our strategies, and it works tremendously because it's the market giving you a clue as to which direction it wants to go to. Now, where would you rather take a clue? From some guy sitting, giving you a webinar out of his office, or take the clue from the actual thing you're trading? Okay? I would think it would be the thing you're trading, right? It's telling you what it wants to do. All right, so let's look at LRCX. Once again, we're on our PTS Primo charts. And we want to see how the buy-sell line is telling us in the first place. Well, should we be looking for those charts that close in the bottom 25 or the top 25? In other words, are we looking to buy or are we looking to sell? It's as easy as going to the buy-sell line tab right here. We simply click on that tab, circled in red here, and in this case, we use the background display of the buy-sell line. Okay? Here's what we like to tell our students. Red sky at morning would mean the trader should take warning. But a blue sky in sight means a buyer's delight. So you see a blue sky behind the charts, okay? That's telling you you should only be a buyer. And you see how even well before we started to go up, back here at the beginning of March, the background was already blue. So once again, our buy-sell line is listening to the market, and the market was telling us, not us, not some guy telling you in a chat room, but the market was telling you you should only be looking at this from the buy side. And so we simply display the back of the screen blue for you to make it easier. Now let's go to our rule here about the top and 25%. Since we know that we should only be buying, we want to look for those bars that close in the top 25%. We're not interested in bars that close in the bottom 25%. Okay, because we're only going to be a buyer. So there are two other rules according to strategy number 4 that we can't divulge. But having said that, there were 2 bars here in April that closed in the top 25 and another one in the top 25 that met all of the remaining requirements of strategy number 4, and thus they generated buy signals. This was in the first week of April and this was in the second week of April. Okay? Well before the stock gapped up and went up 20 points. Did anyone tell us from the company to buy the stock? Absolutely not. Did the CEO call me up the night before and say, hey, Steve, why don't you generate some buy signals? Why don't you go into a chat room and tell everyone to buy this? Because, it'd be nice for all of your students to have a nice profit the next day. No. Where did we take our cues from? We took it from the stock in front of us, from the market, because it tells you just about everything you need to know. That's the beauty of our PTS Primo charts. We make it simple. And for the first time, there's a platform teaching you how to listen to the market. Now, we've talked about the 3 best performing stocks. Let's look now at the 3 worst performing stocks, okay? Now, would we have had losses? Because someone looking at this will say, well, Steve, your stuff is buying, it works great, but mostly everybody makes money when markets and stocks and things go up. How about the stuff that went down at the same time? All right, well, both the S&P 500 and the NASDAQ, they stayed relatively flat in April, but several stocks fared much worse over that past month, just a few weeks ago. Now, here are 3 tech stocks that posted steep declines in April. Let's see how the same strategies, the same techniques would have performed during those last 3 months. These are the 3 worst performing tech stocks in April. They were NH, UIS, and FNSR. Let's start out with NH. Once again, we're going to be looking at strategy number 8. Now, we're not going to go over all the highlights again. I'm sure you saw that in the very beginning when we were looking at the up stocks. But remember, strategy number 8 is solely designed to trade stocks for big movements many times coming in a stock, a big move that's going to be coming. And it generates its signals based off its relation to the buy-sell line. So let's look at NH. Coming in, we can see that, well, we were kind of going up and then we started to go down, but we may be making a double bottom here. The volume really isn't that strong to the downside. And as we can see, this is a rather inexpensive stock, only a $5 stock or so. So, I wouldn't really be looking at this to go any further to the downside. Well, what's the first thing we want to do? We want to click on the buy-sell line to tell us what side we should be on. And once again, we're going to display this with our color band ribbon on the bottom. So you just simply click on the buy-sell line, choose the color band ribbon, and what's it telling us? Red sky at morning, sailor, take warning, or in this case, trader, take warning. So it's basically telling you, take warning, do not buy anything because the market's telling you it wants to go lower, okay? So if a market wants to go lower, we have to see its relationship to this. How far away or how close is it to our 50-period moving average, the buy-sell line? And because of the formula included within the strategy course, it generated a signal right here to go short, to sell. So if you were long this stock, this would have been a good place to sell, to get out of your position, or even if you wanted to short it, you could have shorted it right here. But we're looking at the 3 worst performing tech stocks, and look what happened. Now, even though this is a very inexpensive stock, it still fell 35% of its value in just 3 weeks. It would not matter if this were an $80 stock, a $200 stock, or as you can see, a $5 stock. Our strategies work in any price range and in any direction. So the same strategy that generated a great signal prior to a buyout announcement in CR Bard also generated a great signal here to go short or exit before the stock fell 35% of its value in just 3 weeks. All right, let's look at our next example in UIS. Now in this, once again, we're going to use our directional tool, trend directional tool, the PET-D, and show you how great this tool is in determining what the direction is that the stock wants to go in. Because remember, it's not a strategy. This is different. This is why we don't label it as a strategy. It's simply a trend identifier. And all it is listening to the market. It's translating what the market wants to do at the moment. So let's look at the UIS. Once again, an inexpensive $13, $14 stock. And as we apply the PET-D, once again, all you have to do is click on the PET-D tab at the top here. It automatically changes the colors. There's nothing you have to do. The only thing you have to do is click on the tab. And the colors automatically change. In fact, as coming into April, we already had a confluence of red bars here. So we knew right off the bat that we're not going to be long this because the trend is telling us it wants to go lower because this is the short-term trend. So if you wanted to apply that same inside bar technique, well, guess what? I'd say the day prior to April, you had an inside day bar here. So you could have gotten short or sold, at least got out of your position right here, roughly about the 14 price level. And there was another chance to get out right here. And as you can see, the stock, inexpensive stock, fell 3.5 points, but it lost 25% of its value. It lost a full quarter of its value in the remaining 3 weeks. See how the PET-D could have helped you, telling you what the trend was going to be? Let's look at the last stock here, FNSR, another inexpensive stock, but we're going to use strategy and forward just to show you that it works in any price range, any direction, and any time frame. As we see here, looking at this just off hindsight, you see, well, it's a $25 stock, but we're starting to rally here. How do we know this thing is really going to go up? It looks pretty good. And in the short-term trend, we're making higher highs and higher lows. So this is telling me I should buy this. And the chat room I go to really likes this stock. They got a lot of buyers in there, and they've given me a ton of reasons to buy this. Okay? Once again, your decisions are all based off outside sources. This is the recipe for disaster. This is the reason why 85% of all traders fail. You're basing it off volume. You're basing it off some chat room, what other guys are doing. You're basing it off some guru on TV. You're basing it off the institutions. Trust me, for someone who's been trading for 4 decades, they don't have a better idea than you do. So if you really want to get on that road to consistency, stop listening to them. These are the same things my mentors told me. I had a very difficult time letting go. But once I did, I got on that road to consistency. And they said, Steve, the only thing you should be listening to is the market you're trading. So if you're trading this, and I said, well, how do I listen to it? And they said, the first thing is find out what the market wants to do in terms of its overall trend. I said, well, how do I do that? And they said, well, it's the buy-sell line, okay? So we've made it simple for you. There's nothing you have to calculate. There's nothing you have to do to figure out what the overall trend is. There's no higher highs, higher lows. All you have to do is click on the buy sell line tab. And in this case, once again, we are displaying the background. And here's what it told us. Red sky at morning, trader take warning. So even though we were going up, this entire time the price was going up, what was the buy sell line telling us? You should not be buying this stock. Use the rallies to either exit your position or to go short. Now, here's what I want to share with you about the consistency. Remember, we want to look for bars with strategy 4 that close in the bottom 25% of their range. Okay, here was one here, here was another one here. Now, these both met the requirements to go short and all the requirements to sell using strategy number 4. Now, it's safe to say that this would have lost you money because we kept going higher. Now, you would have taken a relatively small, minor loss with that. But remember, trading is all about consistency. 2 steps forward, 1 step back. We're not going to promise you that every trade is a winner. You will take small losses from time to time, just as every basketball player will not make a basket on every shot. Every entertainer, every actor will not have a hit movie every time. Okay? So it just stands to reason that not everything works 100% of the time. What you want in your trading is consistency. So the first trade would have generated a loss, even though the overall trend was still staying down. So you would have sold again, and look what happened. This time it kicked in. So the initial loss would have been a loss of 3 points, but had you taken the second trade, well, immediately would have made 6 points in your favor. And all the time, the background display remained orange reddish, telling you that it's okay to stay short. Okay? So let's sum it up. We have here the 3 best and the 3 worst performing stocks of April 2017. We shared with you 3 different techniques, 2 strategies, 1 trend identifier that would have been applied to each and every one of them, and how you would have been profitable and had consistent winners on each and every one of those particular issues. Now, here's the good thing. All the things I just shared with you are all offered in our new Elite Stock Trading College. I offer this college roughly about once every year or so. And this, I believe, is going to be our 3rd time we will be offering this in roughly about the last 8 years. We've only offered this 3 times in about 8 years. And because it's extremely popular, but we don't want to saturate the market too much with all of these different techniques and courses. I've just shared with you a tip of the iceberg of what's actually offered in our live college course. There's going to be 6 weeks of live training. So here's the curriculum. In week number 1, we're going to talk about the foundation and the building blocks of stock trading. I've just barely touched our philosophy, but you see what its core is, in that we teach traders how to listen to the market. We teach traders a simple way to learn how to listen to the markets. For so many years, you've been taught to listen to volume. You've been taught to listen to support and resistance. You've been taught to listen to what someone else is doing. And you can, look at your trading results and see how well that's worked. Most likely, many of you have fallen into that 80 to 85 percentile of group of traders who fail. Well, we teach you the basic building blocks and foundation of stock trading with that we really believe strongly will get you on that road to consistency. And it's not about anything you've learned before. It's about listening to the market, and it's really about discarding all of what my mentors called noise. These are things that really show no consistency, and making your trading as simple as possible. Okay? As you can see here, what I just went over with you, I showed you how simple it is to trade in sync with all of these different markets, whether they're going straight up or straight down. So our methods and techniques are extremely simple. So I don't want you to think like, well, I've only been trading for a relatively short time. This is a little bit too much advanced for me. It's not advanced at all. We have members in the college that are new to trading, that have never traded before one day in their life, that are now consistent traders. So we'll cover our basic philosophy in week number 1. In week number 2, we'll go into our most consistent strategy, strategy number 4. That is by far the most consistent strategy. It transfers onto any market, any time frame, any direction. In week number 3 of our live classes, we'll go on to stock strategy number 8. You saw how it pinpointed almost precisely days before that announcement came out that CR Bar was getting bought out. How did it know? Because strategy number 8 listens to what the stock wants to do through its unique relationship with the 50-period simple moving average. And then in week 4, our live class will cover everything entirety with Pet D. We'll show you exactly how to implement it, how to use it, how I like to trade with it, and we'll show you how well it can be used in the different applications, okay? Because the secret to Pet D is not in this formula and what it's based off of, because it's proprietary. The secret of the Pet D is how you apply it, because most traders try to figure out what it's based off of, and you're barking up the wrong tree. I mean, that's the wrong motivation. The motivation and goal you should be having is how to apply it correctly, because that's the secret to the Pet D on its use with the particular market you're trading. Excuse me. Now, we realize that many of our students in our colleges and courses like to trade options. So we will have 1 week where we will devote entirely to option trading, showing you how you can use all these techniques and strategies with options. So if you say, well, Steve, I would love to learn this stuff, but I don't really buy or sell actual stocks, that's okay. You can apply this with option trading, and we'll spend that entire week going into detail. And then lastly, our final week, well, we're going to give you what we feel is the best of the best. These are 2 different things that we actually haven't used at all. In fact, they are just complete courses that are only used in the colleges. So we're going to talk about advanced trade management, and then we're going to go secondly into putting it all together. Advanced trade management is another proprietary tool I was taught on the floor, and it's a way to find out whether you should be trading your particular strategy or not. And it's a formula you need to apply, and I show you exactly how to do that. Then we put it all together, answering any questions you may have about the Pet D, about the strategies, and these are all live classes, so you can talk to me and ask me questions, and we'll go over everything in their entirety. And one thing I don't want you to think is that this doesn't just end at the end of 6 weeks. Since you're a member of my college, you're a member of and student of mine for life. So you can always ask me questions even after the live classes have ended, okay? Now, these strategies, as I just showed you, work tremendously well with stocks, but you can also apply them to ETFs, futures, Forex, and commodities. Even though some strategies such as 8 work the best with stocks, you can still apply the Pet D strategy number 4 with all these different markets. And it doesn't matter if you're a day trader. It doesn't matter if you're an investor. It doesn't matter if you just like to trade currency pairs. They can all be changed and transferred equally onto the different markets and time frames. Here's an example here, the Canadian dollar. Looking at this in hindsight, we see, well, boy, this Canadian dollar went straight up. How could I have applied one of the strategies involved in the college course? Well, look at all the buy signals that were generated using strategy number 4. These were all actual buy signals using the same rules that you will be taught in the college on the Canadian dollar, though. We can also look at crude oil. When crude oil was going down last year, a lot of people were saying, boy, how would I have known and how could I have taken advantage of that? Well, strategy number 4 generated all these 3 sell signals right there as well. So the same rules can be applied. And as you can notice here, where are we closing on these signals? In the bottom 25%, okay? This is the technique and the rule I taught you today. Now, we have tons of testimonials. If you go on my site, specialisttrading.com, or if you go on Pro Trader Strategies, you'll see tons of testimonials, not only from beginning traders and traders who have never traded our techniques, to actual hedge fund traders. Here's one from a hedge fund trader who took our course, that has known me for roughly about 25 years, and he finally took one of my courses, and he said it really changed a lot of his trading around. So it does not matter your skill set, okay? I don't want you to think if you've been trading a relatively short time or if you've been trading a long time how this couldn't help you. It will help all traders, okay? So let's recap before we go into any questions that you may have. Remember, our goal is to educate you. The purpose of this course is not to say, well, listen, we're going to send you the signals on a nightly basis. All you have to do is simply go to the website and figure out what to buy or sell that night. All right, we're going to provide you with signals, but for educational tools so that you know what to look for. Ultimately, through this course, you will be able to study and learn on your own so that you don't have to rely on us. You'll be able to see the signal before you even get the email alert, okay? So that's our philosophy. Trading, successful trading should be non-subjective. You should be able to look at the chart and not think, well, gosh, I don't have any idea. It could go up, but then it could go down. You should have a clear and cut objective as to what you think that particular stock is going to be doing. It should also be consistent, all right? So in other words, we're not swinging for the fences. We're not, as so many other supposed educators are doing, selling you the farm, telling you that, boy, this system I have generates thousands of % a year. We don't believe in that. All we're trying to do is get you to become consistent. because consistency is what equals success. Okay, I'm a successful trader only to the point that I'm consistent, not because I hit home runs every time I trade. Some of my winners are very small, but it also is the fact that I'm able to have 2 steps forward, 1 step back in my trading process. From time to time, I will hit a home run, but that's not what I'm looking for. I'm only looking to become consistent. Consistency equals longevity, okay? You can have any method and hit a home run right off the bat, and you can think, boy, this is great. I'm going to be a millionaire in a couple of weeks, and then lose it all. That's not what we're trying to promote. That's not what we teach. Also, successful trading should be as simple as possible. All right, this is one of the first things my mentors taught me. I was trading strategies and methods that had maybe 15 or 20 rules, okay, to them. What they told me was to simply stop listening to this noise, to strip away about 90% of everything I was relying on. And once I did that, I only had maybe 3 to 4 rules I was basing my trading off of. And that's what we do in our college. Most of our techniques only have 3 to 5 rules tops, maybe 1 indicator at most. And they're very, very simple to apply. And lastly, most importantly, successful trading should make you a part of the process, okay? You need to be in control. Once again, the reason why upwards of 80 to 85% of all traders fail is because they are not a part of the process. They're simply taking an order based off one indicator or what some person is telling them to buy or sell. You should never do that with your hard-earned money. You should be in control. The reason why most traders don't do this, myself included when I first started, is because we're always taught to follow some guru. We're always taught to follow what someone else is doing, because obviously they must know what they're doing, right? Now, even if they're successful, it doesn't mean that you'll be able to implement the strategy the same way they are, all right? Because everyone brings something different to the table. Some traders like to trade conservatively. Some like to trade aggressively. Some like to trade a different time frame. Others don't. So, you may not be able to mimic and do exactly what some other successful trader is doing. So therefore, you shouldn't be expected to mimic their trades. It's ridiculous. You should trade your own style. You should be a part of the process. This is what we stress in all of our college courses. So here's what's offered. Our Elite Stock Trading College, 6 weeks of detailed instruction, 2 proprietary strategies, strategies 4 and 8, where I give you dozens of entries, dozens of exits, and dozens of stops for you to decide what to use. We also supply you with educational signal alerts. We're going to throw in the Primo Early Trend Detector, that's the PET D. We're going to spend an entire week devoted to option trading. We're going to talk about advanced trade management. That's the ATM method that tells you when you should be trading and when you shouldn't be trading. And also you have lifetime correspondence with myself. Now, really, there are so many traders who really, have learned so much by taking this course. And this is what I really want to say to all of you. A year from today, you will have wished you became a member of this course, because if you continue to do the same thing that you've been doing, you're most likely going to get the same results. And if you're not happy with them, now's the time to jump on board. So here's the great offer we have for you. We have roughly upwards of $10,000 to $12,000 worth of information provided for you in this course. Here's what we've done. We've dropped the price down to $49.95, but we're also going to discount it an extra 10% down to $44.95. But we're not going to stop there. We're going to include payment plans. So if you can't come up with $44.95 in one lump sum, that's okay. You can come up with a small deposit and still be a part of the college and have some type of payment plan where you can be paying as you go. So this includes 1 year of trade signals. But this is all just for a limited time with this great, great discount, this great, great deal. This stock college is probably going to be starting this next month. So now's the time to lock into these prices if they happen to go up any higher, or if we close up the class. Here's how to take advantage of this great, great deal. Once again, my sister site, which is Pro Trader Strategies, they handle all of my marketing and all of my courses. You can email them directly at trading@protraderstrategies.com, or call them. Probably the best thing to do would be to call them so you can put together that payment plan if you'd like. And there's no obligation. You can speak to a trading consultant and he can devise a payment plan for you. Everyone's different, so everyone will have a payment plan that meets their needs. And you can call them directly at area code 310-598-6677. Now that's the link at the very bottom there that will take you to the sign up page with this great offer, but it's not a live link. So if you want to click on a live link, just go to the chat box on the far right hand corner of your GoToWebinar column there, and you'll see under the chat category there is a link that they've just put on there. You can click that on and it will automatically take you to the sign up page. Plus there's a lot more information about what's offered in the course. So this is all the information you need. I'm going to leave this screen up here while I open up the question and answer box. And I want to thank everyone for holding off on any questions. I see there are quite a few, so let me get to them really quickly here. Claudio is asking, what is the difference between the PET D and the buy-sell line? Very good question, and it's really not that difficult. Let me start with the buy-sell line. The buy-sell line tells you the overall trend, okay? That's the overall trend. I like to describe it this way. And the PET D, let me just clarify that. The PET D tells you the short-term trend. So here's the best way I like to describe it and put it in visual terms. Think of the ocean, all right? Say you're on the beach staring out at the ocean, all right? Now you see the waves coming in, hitting the shore. Those are the short-term waves. That's what the PET D is. That's the short-term trend, the waves hitting the shore. Now, if you were able to go out 5, 10, 20 miles out into the ocean, out into the sea, there would be some large undercurrents, all right, that are determining the ebb and flow of the ocean in large distances, okay, but you can't see them. That's the overall trend. That's what the buy-sell line does. So you want to combine these two if you're a conservative trader. So what you'd like to do is have the overall trend in sync with the short-term trend. Now, a lot of traders like to do this, but they've always been taught, myself included, like if I'm trading a daily chart, well, the way I want to do is line up, make sure that the weekly is in sync with the daily, right? That's, you know, traditional wisdom would tell us that's the way you trade. You don't need that at specialist trading. You can do that if you like. It's not required. It's a lot simpler if you just combine the buy-sell line with the PET D, and they're both offered, especially on our new PTS charting platform. They're right there for you, okay? So it's a great question. It's simply the overall trend, and the PET D is the short-term trend. And they're based on two entirely different methods, okay? Let's see. Awais is saying, I've been losing money for 20 years. I really need help. Can I just get the PET D to see before investing? Well, you know, unfortunately, we don't have trials, Anis, but what you can do is, and I know a lot of people would like to do this if they like to purchase something separately, you can contact Pro Trader Strategies. I know that, you know, once again, I had said that everything in our course, if you bought them separately, it would probably cost you over $10,000 worth of information. We've reduced the price by 50%. And then in today's webinar alone, we're cutting that price even more, another extra 10%. And we're including payment plans. So we've really dropped the price to make it affordable for everyone. And I'm sorry to hear that you've been losing money for 20 years. That's very common, though. I know it doesn't make you feel any better, but as I stated, 80 to 85% of all traders fail. They lose money. So I really think we can help you. I think if you'd like to purchase something separately or maybe get a beginner's course, contact Pro Trader Strategies. Their trading consultants can set you up with something as well, okay? Ashley asks, hi Ashley, she says, do you use the dynamic duo in combination with the PET D all the time, the PET D by itself or strategy 4 by itself? That's a good question. What Ashley is stating is that we have a great program that's called the dynamic duo, and what it is strategy 4 and the PET D alone. In other words, combining them together. And the PET D simply confirms the strategy number 4. What Ashley is asking is, do I always or can you always use them together or can you use them separately? Yes. Remember, once again, our credo is we don't want to tell you how to trade. We provide you with the tools and knowledge you need to make your own decisions. Now, sometimes I will make my trades simply based off a strategy before, and other times I will base them off of the dynamic duo, which is in combination with the PET D. I would say that a good 80 to 90% of my trading applies the PET D, but every once in a while I don't need it. So it's up to you. Your strategy 4 by itself already has a very high level of consistency. We're just saying that once you add the PET D, you're increasing that level of consistency even more. But ultimately, it's your choice. Remember, we teach strategies. We don't teach nor do we trade systems. The difference is they're both rule-based. In other words, they both have rules. Systems have rules, so do strategies. But a system is different in that you must go down the rules one by one and apply them each and every time. This makes no difference whatever market you're trading. It makes no difference if you're in a flat market. It makes no difference if you're in a straight up market. It makes no difference if you're in a straight down market. It makes no difference if the market is volatile or if the market is in a range, okay? But you must apply the rules. It makes no difference. Here's the difference with strategies. Strategies are 70% rule-based, but then they give you about 30% allotted for discretion. Now, the discretion does not mean, well, I woke up today and I feel kind of lucky, so I'm going to just buy everything. That's not what discretion is. That's just basically just hoping and praying. Discretion comes from experience. Discretion comes from paper trading and an insight in seeing how markets trade and seeing how your technique works through practice, okay? It's based off of what you've learned in our courses and what you've learned through discussions with me and conversing with me and what you've learned on your own. And then you can say to yourself, you know what? I've seen this setup before. I don't need the PET D right now. I'm going to take the signal without it. That's your discretion. See, that's totally different from a system. So this is where we say we're not in any way, teaching or trading systems. And because we allot that discretion, that's why we don't have, statistics, because everyone trades differently, which we promote. We encourage you. So we can't have a statistic for each and every one's different style of trading. It would be ridiculous. We wouldn't have enough time in the day to teach any of our courses because we'd be putting statistics together. It'd be so cumbersome and just ridiculous because everyone should trade differently. It doesn't matter what someone else's statistics are, okay? If they have statistics that generate 70, 75% winners, but if you're unable to trade that way, what difference does it make? You're probably going to end up losing anyway, and you'll do the same exact strategy. You'll probably enter it incorrectly because you can't follow it because it's not your persona, or you won't be able to follow that one person's rules because they don't meet your risk parameters. And so you'll most likely lose money. So this is why we don't believe in any type of statistics, because everyone should trade what makes them feel comfortable. Okay? Follow your own path. That's how you become consistent. Okay? Once I stopped, we didn't have chat rooms and trading rooms when I was trading 40 years ago, but we had newsletters. All right, they were the same as going to a trading room or a chat room. And I used to get the newsletter every week, and I would buy or sell whatever this guy said. I had like 10 different newsletters, and it didn't work. It was no different. It didn't work at all for me. Maybe I'd get one or two winners, and I'd lose everything on the others. And this is the same way with going to a chat room or subscribing to a signal service or listening to some guy on TV. It doesn't work like that. You have to make your own decisions, okay? Brian is asking when this course will start. Well, we're looking to start in June. But remember, once we fill up to a certain size that we like to trade, we don't like to keep it too big. In other words, we don't want to make this a 200-member class. That's way too big. We usually try to keep it small, anywhere from 10 to 30 members at tops, because we want to keep it intimate. And one thing we forgot to mention, they are going to be live courses, but they also are recorded. So if you can't make each and every one of them, that's okay. We're going to do them live online courses where you can converse with me, and they're just for the members in that course. And they're usually anywhere from 1 to 2 or 3 hours long as you want to go. I'm there with you the entire time. We can have them on weekends. We can have them before the market, after the market, during the market. It's up to you. I'm here as your mentor to fill in the best time and the best amount of time for you, okay? If you can't make them, then we record each and every one, and you can watch them at your own leisure, okay? Ed is asking, how can you tell if the PET D is bullish or bearish when the last candle is a body-only candle, neither wick nor tail? Remember, the PET D is not concerned with whether you're looking at a candle or an open, high, low, closed chart or a range bar. It does not take any of its decision-making process off of the bar. So don't be concerned with what the candle was. All you're concerned with the PET D is the color. If the color is green, the PET D, not the bar, forget about the bars. The PET D is telling you that I still want to go up. Whatever stock, whatever future, whatever currency pair you're looking at, it's telling you I still have an upward bias. If the PET D is red, it's telling you I still have a a lower downward bias. That's it. It has absolutely no, discrepancy based off the bar. The bar has nothing to do with it. It's looking at an inner formula based off of momentum. Okay. Let's see. Brian is asking, what is the price including NinjaTrader and/or TradeStation indicators for Pet D Strategy 4, number 8, and also can you use TradeStation radar screen to screen? I can tell you, yes, you can use the radar screen for all of these, but in terms of prices, you have to contact ProTrader Strategies. They're going to give you the information for all of this, and I can tell you that it works on Metastock, it works on TradeStation, it works on NinjaTrader, it works on MT4, Sierra Charts, FXCM. They'll give you the full list, and it also, I would suggest that it works the best on PTS Primo charts, which all the slides came from those today, because it's so simple. It's not each and every one of those different platforms has a different way to access them. But with the PTS Primo charts, it's all one-stop shopping. It's all right there for you. All you have to do is click a tab at the very top of the screen, and it's automatically displayed. Whether it's the strategy, whether it's the Pet D, whether it's the buy-sell line, it's all right there for you. We make things as simple as possible, okay? So contact ProTrader Strategies, and once again, these work on ETFs, it works on stocks, commodities, anything you really like to trade. Let's see here. What is the deal without or with TradeStation? Well, we can include the add-ons for TradeStation as well, like I just said, so it makes no difference. Mark asks, can you explain the color of the inside-out day? Well, remember, it's not an inside-out day. It's basically just called an inside day. And all that technique, remember, it's not a strategy, it's not a system, it's just a technique showing you a high probability entry point. That's it. Okay, remember, a strategy or a system needs about 3 or 5 more rules telling you where to place your stop, where to place your exit, where to move up your stop, money management. A lot of different things go into the making of a full-fledged strategy. All this is doing is telling you a high probability entry point. That's it. It's just one of the pieces of the puzzle. So what we look for is an inside day pattern. That's a 2-bar pattern. Okay, bar number 1 has a range from top to bottom of the bar. Bar number 2's range is inside the range of bar number 1. In other words, it's either equal to or less than the range of bar number 1. Okay, that's just the pattern. Now, what we're looking for is for both of those bars to be colored green. If they're both colored green, that is a high probability entry point. Not coming from some guy on TV, but coming from the market, telling you that most likely we're going to go higher. This is a good place to enter. Okay. Now, conversely, if you have an inside day and both of those bars are colored red, that is a clue coming from the market that that's a good place to enter, to go short or to sell. Excuse me. So that's just an entry technique showing you how simple it is to take your decisions from the market. You can make these decisions on your own based off what we teach you. And I teach you tons of these different things in the college. Okay, so it's all going to be right there for you. Things I've accumulated in 4 decades of trading will be yours in just 6 weeks. So tons of information, upwards of $12,000 worth of courses and information in a very inexpensive $4,500 price tag with 40 years of mentoring experience coming as well. Okay. Remember, once again, a lot of people are asking if they can try the Pet D on some type of trial plan. Basically, you'd have to contact ProTrader Strategies for that. I know they don't like to sell that separately in terms of the college, but contact them. Remember, I handle the education and the teaching and trading portion of the companies. ProTrader Strategies handle all of the sales, all the discounts, all of the payment plans of the strategy. So they're the ones to contact with those questions. Anything with actual training and teaching should be sent directly to them. Anything with, if you're signing up for a course and you want the discount, you should contact ProTrader Strategies or your current rep there, their trading representative at ProTrader Strategies. Now, remember, once again, look back at your trading. We are now into the 5th month of May. Now ask yourself, close your eyes and ask yourself, are you where you wanted to be in your trading on January 1st, 2017? Are you anywhere near? I'm sure some of you probably are. Maybe you're even further along than what you thought. But I can almost venture to say that once again, 80 to 85% of you are nowhere near where you thought you'd be January 1st, okay? Isn't it time you got on that road to consistency, which you always wanted to get? Isn't it time you were able to have the confidence to make trades and say, boy, I'm able to, over time have consistency in my trading. I feel confident, even if this trade didn't work out, I feel confident that the next one will be able to recoup that loss. Well, this is what we offer in all of our courses. We're not promising you some strategy that generates thousands of % a year. We're not promising you that every trade is a winner. What we're doing is promising you education and teaching you how to apply this to your trading that has stood the test of time. Okay, these are the same things that were able to turn my trading around. Hopefully, they'll be able to turn your trading around. We have members in over 110 countries around the world, and we have students in virtually every state in the United States. Go do research on us. Go do a Google search on myself, on Pro Trader Strategies, on Specialist Trading. We have tons of testimonies of people who finally become consistent after trading for 10, 20, 30 years of losing. All right. If you want more information on pricing, on discounts, please do not hesitate. There's no obligation. Contact Pro Trader Strategies. Call them at the number right there. If you're interested in having someone who's been applying these strategies to their own personal trading for the last 40 years, here is your chance to be mentored by someone who's been trading for that long, okay? Most of the webinars I'm sure you've gone to have someone who's been trading for 5 or 10 years. That's still very relatively short time. The ones who have been able to survive the markets in any environment, in any direction, are the ones who've been trading for 30, 40, 50 years, all right? These are the ones you want to mentor you. So, in conclusion, I hope you got something out of this. I hope you see that we're really devoted to educating you as students of ours so that you can be taking your trading to the next level. I look forward to all of you becoming members of the Stock College, and I look forward mostly to all of you becoming students of mine at Specialist Trading. Thank you so much for attending. Look forward to seeing you in class in the next couple of weeks. Thank you. We'll see you next time. Bye-bye.